Good morning, traders. It's Tuesday, November 21st. I was having some technical difficulties this morning and just getting the video out, finally processed now. Anyways, taking a look at the charts, we got the equities. Pretty much everything is trading higher today, other than the retail sector, and the volatility is down. Obviously, when stocks are rising, the volatility continues to fade. Now, if we take a look at the VIX real quick, you can see it came all the way up to this upper blue line we talked about. This is a falling trend line that we had seen going way back on the charts uh, as the volatility condenses. This blue line down here, this level that we've kind of tagged 3 times on our way back down there, is a level that we hit back in late 2007 during the last major market top. And you can see how volatility is condensing here. Eventually, we're going to have a huge reversal in the market. But again, this takes a long time, but we are getting pinched in here in this falling volatility level. And eventually, we're going to see a major market top. But at this point, stocks continue to rally and the volatility is falling back down, fading down near multi-year lows. Now, if we take a look at the stock market, SP 500 trading up, pushing to new highs. We're seeing some big move up. The Nasdaq leading the way, pushing up to new highs. And we've seen a real kind of tear your face off rebound here in the small cap stocks. They were underperforming, fading lower and lower, and then they've had the last 4 sessions very strong, pushing up to new highs real quick again here, getting the market into an overbought territory today. Everything is actually kind of moved to the upper end of their ranges. We're seeing more or less greed buying and short covering, meaning we're seeing ratio over 3 to 1 on the NYSE, meaning there's 3 shares being bought to every one being sold. That means the majority of people are buying, and that usually gives us a sign that the markets are a little bit overdone, and today's big gap up and push higher might end up being a reversal pattern in the next couple of days, depending on how the next couple of bars go, and we see a little bit of a pause or pullback. Now, take a look at if we take a look at the transportation index, which usually leads the way. It has been struggling here, kind of just trading sideways, higher today, but again, just not really finding any real life in the market. And if we look at the safe havens, we are actually seeing the safe havens continue to move up with stocks today, which kind of tells me that I think this pop could be very much in equities, could be a sign that the market is overdone and we're going to see stocks start to pull back. So I think smart money is rotating into the safe haven. Bonds are up, testing some recent highs. If we look at gold, again, it's up as well. Big down day yesterday, so I'm not surprised we see just a reaction bounce back at this point. Silver up 1%, same type of price action. Big down day, so a bounce is the norm. If we look at the gold mining stocks, they continue to kind of linger sideways. And in the grand scheme of things, if we look at GLTR, this is a precious metals basket of shares, and it really holds platinum, palladium, silver, gold. It's just got a basket of just precious metals, and you can see more or less it's been oscillating in this big range and then had a nice strong impulse move. Impulse move is when you have a strong rally and it breaks 2 significant standout highs, which it broke this one and it broke this one, and then you get the first pullback, and it's really kind of been consolidating in this range. It's going to be stuck in here to this low. You can argue that maybe it's getting squeezed up here and trying to build a base, but overall the basket of precious metals are still holding up. They're just kind of in limbo, trading sideways. Gold miners have been moving lower, but the in general precious metal basket is still holding up fairly well, and really it's kind of, you can see these blue bars in here. This is volume by price, so more or less it's fallen back into that area and it's finding support there at the moment and continuing to kind of trade sideways. And it goes to show that there is potential here, that this could be a bear flag forming, and the second half of the move, we can see this orange line down here. This is a potential downside target. If equities go into a blow off top and really just start picking up speed, insane to the upside, the large cap stocks, then we would see precious metals in general, I think, fall down, which we've talked about in gold, silver, and the individual miners. There's lots of potential room for them to fall and still be in a major basing and a bullish formation. This is potentially a bullish correction within a basing formation. So we're really trying to see what the market is going to do. Precious metals have been trading sideways, grinding it out, not really giving any true indication of where they're going. They're all lingering at a support zone and just kind of holding tight. Now, if we take a look over at energies real quick, crude oil up, pushing back up to these recent highs, this move to the top of this gap window. So we're having a nice move up there. If we look at the energy stocks, they're up 0.7%. They're really underperforming here, and they haven't really recovered. Crude oil would be equivalent to trading back up near these highs, somewhere in this area, yet energy stocks are underperforming. It'll be interesting to see how this formation plays out. At this point, it looks pretty clear like a potential head and shoulders formation in the energy sector. And if this just kind of fizzles out and gets stuck into this more or less resistance zone across here, we could end up having a right shoulder and a neckline that, if broken, could bring us back down into the 64 area. So we're going to keep our eye on the energy stocks. They tend to lead crude oil, and the fact that they're underperforming is not a good sign. We could very easily see crude oil top out at this level and then eventually head back down. So we're going to keep our eye on the energy sector. It has had a nice impulse move, as we talked about a minute ago. It's broken two significant pivot highs. Actually, you could argue it's broken even more, another one here. And of course, it had a pullback. It's had another pullback. Some pretty big, quick panic selling, kind of flush out in the market. And we're going to see how this can stabilize and how it unfolds. At this point, you can argue here it's got a potential broadening formation, usually a weaker sign. It's got potential for this head and shoulders. It's got this critical support level that if broken below and closed below, then we could very easily see this dump back down and potentially even go all the way back down into a double bottom, something back down at these levels. So we're going to see how this starts to unfold. At this point, it's got a pretty ugly pattern and no real sign of which direction it really wants to go. Taking a quick look, last but not least, over here at UUP, US dollar index. It has been in a downward trend, kind of had a reverse head and shoulders here, a shoulder, head, shoulder, broke that neckline, kind of faded back down into support, and it's trying to find support here. Overall, if the dollar continues to move up, we're probably going to see some continued pressure in the precious metal sector, commodities, as the rising dollar will put downward pressure there. But at this point, it is trending higher. We've got significant higher highs and higher lows here. And right now it's at short-term support, pretty much this breakout level right across here. It's settled back down into there. It's trying to reverse back up. And if it does start to move higher back into this near this 25 range, obviously that's going to put downward pressure on commodities. So we're going to see how things kind of unfold there. But today, the big move is volatility. No one is afraid of falling stocks, and we are seeing money move back into large caps in a big way, and everybody's kind of piling back in for another big gap. Gaps tend to get filled, which is what we need to be aware of. And if we take a look at this price action and go to, let's go to the 10-minute chart and just get regular trading hours. You can see here the gap window. I can zoom out a bit. We've got several gaps here to get filled. More or less, the market has got a gap from the 16th right back over here. More or less, the market closed down there. We've got this gap down here, and now we've got this new gap up here. So there's potential here that we're getting this kind of big pop, this kind of blow off top, moving higher, and we are getting to an overbought territory. So I wouldn't be surprised if we see selling step in over the next couple trading sessions and we see some type of pullback, and there is potential for a more significant pullback back down to fill this other gap window. So this is what the market likes to do. It's all the indexes have poked to new highs. I think it's getting a lot of media coverage. We can tell by the NYSE volume flow, everybody's piling in buying stocks. And usually when you get these huge moves of excitement and media, that's usually the end of a move when we see a sharp pullback. And that's what we got to be very aware of here going forward. Anyways, that's it for now. Talk to you in a bit. Bye-bye.